right. Hope everyone's doing well, having a good weekend. It is Sunday, which means it's weekend market update time. We're going to go through SPX monthly. I'm going to relook at this high time frame cycle count to better illustrate what I really think is going on when we zoom out. And then we're going to overlay that with the count on SPX denominated in M2 to give us a secondary view on what I think is also going on under the hood as it relates to stocks, but also Bitcoin. Then we're going to look at Bitcoin on the high time frame. Then I'm going to look at IWM. I'm going to look at yields, and I'm going to look at the dollar. And I think that's going to be the agenda for today. So if we start out looking at the S&P 500 monthly chart, I've had this chart for some time, this count for some time, and I've posted it on my X and I've reviewed it here. And just as a reminder, I'm not a financial advisor. The things I talk about, they could always go up, they could go down, they could go sideways. I'm just here presenting my convictions, my beliefs, and the market's going to obviously tell us after the fact if those beliefs were correct or not. And so just kind of use these videos for education. Our belief going into what I call the April abyss. I think I've coined that phrase. I think I'm gonna trademark it as well if anyone tries to use it. Um, the April abyss, I kept claiming was again, is just pulling back of a slingshot, so to speak, in terms of energy. Thinking about it in terms of energy, we see it manifested a lot in financial markets. On the monthly, this chart told us the story. And I said I expect equal to or greater force coming out as it came in, and we got greater force coming out, and we're at all-time highs. And most importantly, what are we doing right now? Well, before I get into what are we doing right now from a Fibonacci standpoint, let's look at what I'm trying to. It's like the placebo, right? What's the placebo in terms of the Fibonacci here? Well, it's saying, have other Fibonacci levels been respected by the market as I have them marked out on this chart? And was there anything significant that occurred at those levels? And then we're going to say, all right, what Fib level are we at now, and what's the next Fib level? Because if all the levels before were respected by the market on a monthly time frame, then the next Fib level that I'm looking at as a target is more likely to be very relevant. You see where I'm going here? And so when I look at the Fib levels here, going all the way back to our expanded flat correction, okay, and the expanded flat correction in the cycle count basically saying that the year 2000 was a macro cycle wave 3. And we had an A and then we had a B wave, made an all-time high, just barely, which was a corrective move, and then followed by a C, which swept. That's what an expanded flat correction is, where you have a up move, then an A, you have B that exceeds the high, and then you have C that sweeps the low, okay? And it fools the most amount of people because, again, the B wave, oh, fresh all-time highs, let's go. The C wave breaches the C, new bear market. And both sides were wrong, and it rips the other way. So we saw that with the great financial crisis, which in essence, right, was the beginning of something major. It wasn't the end, right? When we think about Elliott waves, think more about the feeling that the market's trying to exude on any time frame, whether it's a large scale time frame or a small scale time frame, like we saw back in April, right? The sharp 4, smaller degree 4 correction, again, it's over. No, that was the beginning of another major move, right? Or the smaller degree 2 in November 2023. Oh, failure, we're going back down to test the lows. No, that was the beginning of the next major move up. And so from a Fib standpoint, if I take this this high and this low, and I say, where was the 1618, which is going to be the most relevant Fib level from that high to that low? It's 2,622. What happened at this level when the S&P hit it in 2017? Okay, we had a consolidation in the form of an A, B, C, D, E, broadening, basically triangle, right? And how long was that? 17 to so 3 years of consolidation around this 1618. And it probably was the most challenging of triangles that you'll ever see, these broadenings, because the lows get swept and the most fierce move is the last move. And that's what COVID was. Okay. And just incredible. This E wave, breaches the 30-month simple moving average, breaches the cloud, gets sucked back up, and then boom, that was, V-shaped recovery up and out of it. But the point being is the 1618 there was very relevant to the market, and it had a lot of trouble around it for 3 years. Okay, see where I'm going here? What's the next relevant fib level from this high to this low? The 2 at 3,617. We had 1, 2, 3 months of consolidation, okay? And then it exceeded it. And then what happened? This was 2021, 2022 through 2020, or fall of 2022, brutal correction. And it came all the way back down and tested this 2 level, okay? Consolidated here for months in and around the 30, and then continued to move. See where I'm going here? So very important fib level. Came back to, it exceeded it, came back to test it, successfully continued. Now let me zoom in, because now we're kind of getting to where we are today. So what's the next most important fib level? Is the 2618, 6,121.32. And so how many months it was hit, mind you, that target was hit back in December. 1, 2, 3, 4, 5 months, 6 months, then consolidation correction back to the 30-month, okay? And snapback, exceeded it, and now we're above it. Okay, folks, so see where I'm going? So this level was respected by the market. What's the next one? It's the 2786. That's the next target. That's the next target, 7,051, representing from where we are today, a 12% increase in the S&P from today's prices. That's the next target. That's it. That's my belief. And then the next one after that is the 3. That's 8,442. That's a 34% increase from where we are today. When do both of these things happen? If they happen? I don't know. I don't know. Should we be consolidating here after such a move? Sure. Sure we should. Can it continue just to grind up? Sure. Sure it can. Can it check back? Sure it can. Do I expect a material check back? I don't know. I don't think so. I think a lot of people went to cash. A lot of institutions went to cash with the uncertainty. I don't think the market's going to let them get back in. I think it's going to continue to grind up higher, and I think these people are going to be forced to chase on smaller dips, and the market gets away from them. But as always, I could be wrong. The short term, we're not as concerned about. What I'm concerned about is the 2 numbers. 7,000 is the next target. That's where I'd expect maybe a multi-week, multi-month correction, consolidation, completely warranted whenever that happens. Okay, something like that, and then off to maybe into 2026, 2027, 8,400, maybe sooner, maybe longer, who knows? This market is surprising. It's surprising, I think, more people every day. And so that's the commentary in S&P 500 monthly. There is nothing bearish about this setup, especially after what we just saw, what we've been projecting was going to happen, and what's happened, and the next fib level that's coming up. Now let's superimpose that with this chart. Okay, the S&P denominated in M2. I made a video, went into a deep dive on this one for the members yesterday. The implication here, in essence, is we're in the acceleration phase. Okay, the same exact setup presented itself prior to the .com explosion. The .com was the narrative for the explosion, and what do we have now is boiling as a narrative that has been for a while? AI. The difference between the AI and the dot-com, in my opinion, and again, I don't get much more past the charts, but the dot-com, I don't know that there was a lot of cash flow assigned to 80, 90% of the things that participated in dot-com. I know that companies like Nvidia, companies like Meta are making a boatload of cash. I know that. I know they can't get enough chips. I know that this narrative is more than just a narrative. There's something substantial behind it. And so I say to myself, coming into this setup, we in essence were like here, okay? Here. Accumulation, breakout, check back, and all-time high region. That's what preceded this. Where are we here? Right? Accumulation, breakout, check back, and now we're exceeding this high from the pivot point where the market went down. So the stage is set for everyone to call tops every volatility event, while the market's intent, in my opinion, is to do the exact opposite here, which is absolutely I don't need words to describe what I'm showing you here, right? So just go in the opposite direction. All right, that's S&P. Oh, no. One more thing I wanted to do here. Okay. Yeah, that's right. I forgot. So the S&P M2 implication and why I call Bitcoin the most bullish asset right now, or since its creation, I mean, and including now, for various reasons I'm not gonna get into in this video, but so here's where Bitcoin was created. Okay. Do we notice something that's going on here? Bitcoin was created here. Major blow off top into this 1, 2, 3, 4, 5, right? 2017 into the larger degree impulse coming out of this SPX denominated M2 correction. Okay. We then had another all-time high in a B wave, which also was the B wave of SPX. So this is one ABC B, right? ABC-C. So this is just a massive flat correction. And Bitcoin made another all-time high in November of 2021 in this B wave, which was also a B wave, I call it, in Bitcoin. So a lot of correlations going on here, right? So in essence, a flat correction here. What I'm claiming on Bitcoin is a massive reaccumulation, which also, from a Wyckoff standpoint, lines up with what we're seeing here. Bitcoin was created during the spring or selling climax test and sign of strength for SPX denominated in N2. Meanwhile, Bitcoin in essence has been consolidating in this area, and now you've got a breakout of SPX denominated in M2, check back. And what do I think Bitcoin's going to do next? Well, let me get to that chart. So all of that's relevant in that what I'm trying to express here is this is the macro chart on Bitcoin. In terms of what I just shared, one of the largest, if not the largest, technical reaccumulation that we've ever seen with Bitcoin, consolidating here at an all-time high region of 108. And everyone thinks the targets are, well, I shouldn't say everyone. I think you have a cohort of institutional names and sources that kind of have a lot higher targets, right? 250, 500 million, but they're more of, I think only one's got 250 for this year, but more of them are like, with it by 2030. But more of the trader types that I see on X are way more conservative, where you got 130, 140, 150, 200, 220. Meanwhile, who's doing this analysis, right? Looking at where Bitcoin is in relation to the SPX denominated in M2, right? And what this structure is doing. No one's drawing these conclusions and these parallels to what if Bitcoin was around during this time, would it have done? Well, we're going to find out because we're in that time when Bitcoin is around. And I'm telling you, I do not believe, and my targets are going to end up, I believe, being conservative. And I continue to say that for a reason, and these are the reasons why. That's what I'm sharing with you in these videos. So whenever this consolidation is over, as we just kind of flag here, whenever it's over, I expect the resolution to the upside to be the quickest that we've seen so far. And that's that. Takes us to 180 to 220 in the blink of an eye. So whenever that happens, we're going to find out. But I think we got a lot of clues all around us. IWM continues to be very constructive, right? What are we doing here? We've got the 30-week moving average that was taken over. We've got the most volume that's been traded since January in this region, respected, right? Consolidated around it, respected jump off point. We're now into the cloud, top of the cloud. I wouldn't be surprised to see some continuation here before maybe a check back and then move. I wouldn't be surprised to see, even a move up next week and then some type of check back below the cloud, fake some people out, right? Before a move. The lowest I would ever see us going locally would be this origin 206.82, where all this volume was. That to me represents an area of very strong support. But again, I'm just speculating. Here's the target on IWM, 310, 315, 310. Okay, that's where I expect this thing is going before any type of multi-month correction, and that's IWM. Yields, yields aren't looking good for yields, right? They look like they're going down. I've been saying this for months now. We've got to move into the cloud. We got to bounce at the bottom of the cloud and trying to come back up. But the 30 weeks on top, you can see the moving average on RSI down here. We kind of checked under it, and are checking back to it. And so what happens this week or next week, not sure. That's the trend to me. That's the trend. And my target for yields is 3.2 to 3.4 in the next major move. The dollar, I'm actually looking for a rally here in the dollar. The dollar has completed, I have a completed move in the dollar. I've got what I've been projecting here following this B wave. I've got 1, 2, I've got 3, 4, I've got 5 wave move here, and that constitutes a C. Could we go a little bit lower? Sure. I'm just looking for some consolidation around here, and then something back up here is kind of how I'm seeing this. And then I'd like to reevaluate. Maybe it goes a little bit lower from here too. I don't know. The structure to me looks like it needs a counter trend rally prior to potential resumption lower, but I could be wrong. The overriding distribution range is this, and we fell out of it. So, and we already had a check back, and so maybe I'm wrong. Maybe it just keeps on going, and we've got, maybe this is 1, 2, 3, 4, and we've got a fifth leg that's missing that gets us to 93. But I'm not sure. Folks, that's it for the update. Hope you all have a great rest of the weekend. Take care.